Good evening, everyone. Welcome to an MQ Traders webinar on the topic How to Ride on Structural Growth of the Chinese Electrical Vehicle Sector. I'm Robin, the host for today's event, and I'm one of the MQ Trader team. Now, before we start, can we just have a quick mic check? If my sound is clear and loud, can you please type 1 in the chat box? Okay, thank you for your response. So before I get started, just a brief info about MQ Trader. Our full name is Malaysia's Quantitative Trader Group. We are a group of traders that uses quantitative methods to do analysis, and so we developed our own MQ Trader stock analysis tool. And in this tool, we'll bring what normally only available to those large financial institutions to our MQ members, as our goal is to empower our traders to make quicker decisions and with greater confidence. Now, if you are interested and want to subscribe to our MQ Trader services, you can do so by opening a trading account through M Equities LH team, and then you can enjoy all our services such as the MQ Trade, our analysis tool, MQ Point, MQ Affiliate Program, and many more rewards as well. Now, the first system that I mentioned is MK Trade. In this system, you can view a lot of information at one glance, such as the live market quotes, our exclusive MQ trading signals, and up to 10 market depth. So if you are interested, you can check the links on the screen or even in the comment section. Now, the next one is our MQ Trader Stock Analysis tool. Now, inside this tool, you'll be able to get buy and sell signals with just one click, and also do our MQ backtest to test the past signals accuracy. And the next one is our reward system, which is the MQ Points system. Now, with these MQ Points, you can redeem rewards at our marketplace and MQ Dummy, including vouchers, or even MQ merchandise, books, online courses, and etc. Now, remember, you can link your trading account to your MQ Trader account so that you can generate MQ Points every time you do trading. Now, if you're interested to find out more about our MQ Points reward system, you can inquire with anyone inside our support team. So here's the summary on the benefits you get if you open a trading account with M Equities LYH. And for today only, you can also get an extra 500 MQ points. So if you are interested to know more, you can type 3 in the chat box or submit your contact details through the link on the screen. And then afterwards, our respective team member will guide you on the next step later. Okay, now for our webinar gift, the first one is for those who trade or are interested in the Singapore stock market. As right now, you can get 100 ringgit cashback if you open a free trading account with M Equities LH and do 3 buy transactions on any Singapore stocks. Now, the campaign ends on 31st December 2022. So if you're interested on the free trading account or even 100 ringgit cashback, you can type 3 in the chat box or just inquire with any of our team members. Now, for our check-in rewards is for our MQ members. As usual, you can get a bonus of 300 MQ points, and the steps to get this reward is very simple. First, screenshot any part of this webinar. Second, find our quiz email inside our email inbox, and then upload the webinar screenshot to get the 300 MQ points. Now, remember, you only receive the quiz email after the webinar ends. And also, you need to register this webinar, only can get the quiz email. So for those who are interested to register the webinar, you can do so now. And lastly is our mysterious gift, which is at the end of the webinar, we'll be giving out mysterious gift that worth up to 249 ringgit. So make sure you stay until the end to win our mysterious gifts. And if you haven't registered for this webinar, we encourage you to register now because you can get our post-webinar updates, such as our webinar recordings and our quiz email where you can claim your check-in rewards. And right here, I'll pause briefly for you to register. And also just a gentle reminder, remember to upload your screenshot of today's webinar to get the the 300 MQ points as your check-in reward. Now, for those who haven't taken the screenshot, you can do so now. And we'll also be having a Q&A session later. So please feel free to use the chat box to send your questions throughout the webinar. And right here, just a quick sharing that NQ Trader is having another live session on the next Wednesday. It's about how to choose the right stocks by analyzing the fundamentals. It will be conducted in Chinese, and if you're interested, do stay tuned to our Facebook or Instagram for more details. Okay, let's move on to our topic today. As right now, every one of 2 electrical vehicles sold globally is in China, and they are even expecting to double their EV sales by 2025. So in this webinar, we'll look at how we can ride on the structural growth of the Chinese EV sector, either through single stocks or an ETF that's listed on the Singapore Stock Exchange. Our speaker today is Mr. Gerald Wong, who is the founder of Banks REITs and has more than 13 years of experience in the investment advisory. And previously, he is also the head of Singapore Securities Research at Credit Suisse. Now, are you guys ready for him to start sharing now? You can type ready in the chat box to let me know you are ready. Okay, since everyone is ready, I'd like to invite Gerald to share with us now. All right, Mr. Gerald, I'll pass the time to you.
Okay, thanks so much, Robin. Hi, everyone. My name is Gerald. I hope you had your dinner already. So what I'll go through today will be the topic of how to ride on the structural growth of the Chinese electric vehicle sector. Robin gave a short introduction earlier, and what I really want to be going through would be how some of these recent developments have actually shaped up and how we can think about investing towards this sector. So Robin gave a very kind introduction earlier. I spent most of my career doing investment advisory, so hope to be able to use today's session to share some of my thoughts around investing in the Chinese EV sector. If you have not heard of Beansprout, we started just earlier this year. What we want to do is to empower retail investors to make better investment decisions. We provide content on our website, growbeansprout.com. We also have a Telegram group that we share our ideas on, as well as our social media on Facebook and Instagram. So if you found today's session useful, do feel free to follow us on our social media, and you can ask us follow-up questions through these different channels as well. So before we start, just a bit of disclaimer. Today's session is for information purposes only. It should not be taken as financial advice. So if you want more personalized financial advice, do seek it directly from your financial advisor. Today's session is purely for education purposes. So maybe if you would agree with that, you can also put in a yes or Y in the chat box so that we know that everyone is aware that this is for information purposes. Okay, what will we share today? Number one, we will go through a recap of what happened in the last few months. If you have not been following up closely on the EV sector, we'll start by providing a quick recap. Next, as investors, we are always looking ahead to see what is coming up. So I will share a bit about what are the prospects for the EV sector for the remaining of this year. Next, we'll talk about the structural growth aspects of the Chinese EV sector. And with all investment, there are necessarily risks, which I will also touch a bit on. And last but not least, discuss a bit about how to get exposure to the EV sector. Okay, firstly, what happened in the first half of this year? So if you have not been following the EV sector closely, don't worry, because what we'll do for a start is to have a quick recap around what has happened so far. So as investors, we are naturally concerned about the share price performance. Here I put in the share price performance of 3 different stocks and ETFs since the start of this year. And what we have seen is that they have fallen between a range of 5% to 40+% so far this year. So the question would probably be what actually caused this share price correction? We all know that the global market has not done well year to date, but there are also specific sector related issues that have caused some of these EV stocks to have come down in value. So first and foremost, what we track would be electric vehicle deliveries. We use NIO as an example here because it is one of the largest listed Chinese EV makers. What we see quite clearly is that since the second quarter of this year, the number of electric vehicle delivered have actually slowed down. Whether we compare to, say, the first quarter, the signs of a slowdown are very evident. So what you see in the previous few quarters is that from quarter to quarter, they will always have the increase. But then from the first quarter onwards, maybe the increase was not so significant. And then by the second quarter, we actually saw that the EVs delivered actually came down compared to the previous quarter. So this is naturally very worrying for investors because most would have expected that the EV sector is growing very strongly and not expecting that we'll see the kind of decline in terms of the deliveries. So the next question naturally is what caused this decline in the electric vehicle deliveries? Okay, so number one, we saw that China's zero COVID policy affected the entire supply chain. So what we have seen over the last 12 months is that because China was trying to control the pandemic in different regions, you saw production disruption in different cities from time to time. This affected indirectly because the components that go into an electric vehicle might not be available. This started with, say, the semiconductors last year, continued through this year, which is why the supply chain impact has impacted the production of the electric vehicles. Secondly, because of the zero COVID policy, some factories were also forced to stop their operations in the early part of this year. And this not only affected the Chinese EV makers, but if you're following the global EV sector, you probably know Tesla very well. And even Tesla was impacted by the restrictions in China when their factory there was forced to stop operations for a period of time. So clearly, we saw that this production restrictions impacted the delivery schedule of the electric vehicles, and together with it, sentiment towards the electric vehicle sector. So as investors, we are also very concerned about the profitability of the companies that we invest in. So the other metric that is tracked very closely by investors would be the margin that is made by the electric vehicle makers. So we bring up example of 3 companies here. We have got NIO, we have got Xpeng, and we have got Li Auto. So all of them are quite big Chinese EV manufacturers that are listed in the US, but also potentially having secondary listings elsewhere that I will share more about later. But what is clear from this chart is that in the second quarter, the margins actually came down for the Chinese EV makers. This is probably most evident for NIO. If you look at the gross margin, it came down to 13% in the second quarter from 14.6% in the first quarter. And if I even compare that to the fourth quarter of last year, it is a more significant decline because it managed to achieve 18.6% margin in the fourth quarter of last year. So not only the deliveries actually came down, the margins were also impacted because of this supply chain constraints, which is why investors actually sold down the shares of the Chinese EV makers. If you look at the second quarter, it wasn't just NIO's margin that came down. Xpeng's margin also came down from 12.2% to 10.9%, Li Auto 22.6% to 21.5%. So this margin pressure was felt across the board by the Chinese EV makers because of the supply chain constraints that we talked about earlier and how that actually impacted the delivery schedule of the EV makers. So in a nutshell, that was really what happened in the first half of this year. We saw that the share price came down and we tried to understand what actually happened. that led to this decline in the share price. I hope the pace that I am going through so far is okay. If you want me to go faster, you can type fast in the chat. Slow, you can put slow. If it's okay, you can just put okay, and then I'll just continue with the current pace. Okay, so I see a few okay responses, so I will continue with the current pace. Thanks so much for all your responses. Okay, so now the question as investors is what is going to happen in the second half of this year? The good thing is that the supply chain constraints are starting to ease. This is not just impacting the car makers, but a lot of the different manufacturers that are being impacted by the supply chain constraint, the shortage of semiconductors. What they have actually come out to say is that this impact from the shortage of semiconductor is not as bad as what it was sometime last year and in the early part of this year. So that is actually a good thing that will hopefully allow the EV makers to be able to catch up their production for the rest of this year. Okay, so we talked about the supply side earlier, how the semiconductor shortage has impacted the production. So now we actually look at the demand side. If you actually look at the demand has actually been very strong. This is a picture taken from one of the showroom for NIO. What we see is that actually there are a lot of consumers that are still keen to buy the electric vehicles. But the thing is the lead time for the delivery of the vehicle is taking a long time. And at the same time, they may not be able to find the model that they want because of all the supply chain constraints that we discussed earlier. One of the reasons that is driving this strong demand is that the government has also led to some incentives that has a lot more consumers to want to buy an electric vehicle. So one example of that is that there's an exemption in the vehicle purchase tax until the end of this year. So that has also led people to want to buy an electric vehicle rather than your normal automotive vehicle. Okay, I see that there are some questions. Audrey raised her hand. We will have some time for Q&A at the end of today's session. But if there are any logistics issues that you are facing, feel free to share in the chat and maybe one of the admin can assist you in the meantime. Okay, so I'll just continue talking about the consumer side and how that has continued to drive demand. The other thing to look out for over the remaining months of this year would really be the new model launches. So this is actually leading to a lot of excitement, not just within the consumers, but also investors as well. Because for investors, what we look out for will be deliveries that will help to bring higher revenue as well as higher profit. So the thinking is that whenever there's a new model being launched, hopefully that will help to drive up the sales of the EVs. One of the highly anticipated model would be the new mid-size sedan ET5 that will be starting to be sold from the end of this month. So if you were to look at the kind of commentary from the management of NIO, it has actually been quite optimistic. If you're not familiar with NIO, just a quick introduction, they tend to focus on the high-end electric vehicles, which is why when we look at the total number of electric vehicles, so it may not be as high as an automaker like BYD that is a lot more mass market. But for this ET5 sedan, because the price point is a bit lower, so what management have actually seen is that the ordering activity is very high. And what they have shared in the conference call is that they see an opportunity to surpass 10,000 units in delivery on a monthly basis. So this is way higher than what their current total delivery is and reflects a kind of confidence towards this new model that they are going to launch. Apart from the ET5 model that has been widely talked about, NIO also has the upcoming ES7 model. This is actually a 5-seater SUV, so a bit larger in size. But not only NIO has got new model launches, we see that for Li Auto, they also have an upcoming flagship SUV. And that has also led to very high anticipation because it is actually a new model for them. And they actually consider this to be a flagship product. So what a lot of investors are looking out for would be how these new models actually perform and whether that will help to drive a new leg of growth for the Chinese EV makers. And that is what we'll be looking out very carefully for as well, to see whether that can be a catalyst for the Chinese EV stocks. Okay, so we talked about the new model launches in the upcoming months. And what the companies have done is to share some kind of guidance towards what they expect to deliver in the third quarter of this year. We saw that the deliveries have slowed down in the second quarter, but what is more important, given that we are now in September, would be their anticipation around whether we'll start to see a recovery from this quarter onwards. The encouraging thing here is that if we were to look at NIO, in the third quarter, based on the company guidance, this is not a forecast. This is what the management have come out publicly to say what they are expecting. They expect the quarterly electric vehicles to be delivered at 32,000, and that is increasing quite sharply from what we saw in the past 2 quarters when they only delivered about 25,000 to 26,000 EVs per quarter. If you were to look at some of the other EV makers, they don't see such a significant increase. So for Xpeng, looking at about 30,000 EVs to be delivered in the third quarter, because they were impacted in July and August by the lockdowns that were happening in some parts of China. And also likewise for Li Auto, about flat compared to the previous quarter, because of the fact that they were also impacted by some of these lockdowns earlier this quarter. So NIO is the standout here in terms of the expected increase in deliveries. Part of it because of the new launches that we talked about earlier, which is helping to drive increased demand for their electric vehicles. Okay, so we discussed production. The next point is really about the margin. So what we care about as investors would be the profit being generated by the EV manufacturers. What management of NIO has shared in the latest conference call is that they expect the vehicle margin to increase in the third quarter of this year. Again, this is the forecast by the management of NIO. It is not our forecast. It is not other analyst forecasts, but that is what the management said themselves. What is actually driving this confidence? Number one, you have got the supply chain constraints actually starting to ease, which was one of the factors we talked about earlier as to how the semiconductor shortage is starting to become better, and that is helping the automakers to be able to produce more electric vehicles. The other factor that is more company specific is that they are starting to deliver the ES7 model. So we talked about this model earlier. It is an SUV. So the SUV is larger in size. It is more highly priced. And with that, the management expect to be able to earn a higher margin. So that is why we track the new launches very closely, because that gives us an idea about how the margin trends of the different companies would perform as well. Okay, so what we saw is that for some of these EV companies, going into the second half of this year, they would think that the number of deliveries that they have could potentially start to pick up. And with that, the decline in margins over the last few quarters can potentially start to improve once again. Okay, so with that, we will actually have a short quiz. We talked about the delivery schedule of different EV manufacturers earlier, and what is the company forecast into the third quarter of this year. The question is, which EV maker is expected to deliver the most EVs in the third quarter of this year? A would be NIO, B, Xpeng, and C, Li Auto. Okay, so I'll just leave you some time. Okay, it's restricted to these three choices. I see an answer which is BYD. For the sake of today's discussion, we'll just limit it to these three options. Okay, so thanks so much for your response. See that a lot of people have been following what we shared earlier about tracking the delivery schedule of different EV makers. So I think most of the people got this right. NIO is expected to deliver the most EVs in the third quarter of this year because of the new launches that they are expecting over the next 1 month or so. Okay, so we talked about some of the recent developments, including what happened in the first half of this year, what to expect in the second half of this year. But if you are investing in electric vehicles, I think what we actually look out for will be the long-term growth of the industry, because we might actually believe that over time, your conventional vehicles will be phased out. EVs is actually the way forward. So there is actually a very strong structural growth angle towards electric vehicles. So what are some of these structural growth drivers that we are looking at? Okay, so we'll go through in the next few slides to see why investors think that EVs are the way forward and it will grow very significantly over the next 5 to 10 years. Okay, so we start by looking at the past. What we have seen here would be the total EV sales across different countries. And we don't actually have to look very far. We just have to look in the last few years from 2019 onwards. Okay, the EV sold in 2019 globally was 2.2 million. In 2020, despite all of COVID, lockdowns, concerns about consumers not having the money to spend, we still saw more EVs being registered, increasing to 3 million. Okay, so this was despite the many challenges that we saw happening globally in 2020. In 2021, as some of these constraints start to be eased, in Europe, in US, some of these lockdowns started to be reversed. People felt more confident about spending money, replacing their cars. The number of EVs sold actually doubled to 6.6 million. So in the last 2 years, we really saw a very significant increase. I don't think you will see a lot of industries that can actually face this kind of figure, where you actually are able to 3x your total sales within 2 years. And this is despite COVID and all the challenges that we face. The other key thing I would like to point out from this chart is if we look at which are the countries that are driving the EV sales, then China is a very big part of it. Okay, China represents close to 50% of all the EV sales globally, and it also accounts for a very significant portion of the growth. So if you look at, say, the growth between 2020 and 2021, the increase here effectively exceeds all the EVs that were sold in US in 2021. So that is why we spend so much time talking about the China EV market. It's not because you have a bias towards specific market, but because if you are looking at EVs, China represents 50% of the global EV market. A lot of the EVs are being manufactured in China, and that is why it is a market we track very closely. The next market to keep a lookout for is actually Europe. Most people would think that it's US because of Tesla, but actually Europe is the next largest market for global EV sales. This is because of the move towards green energy that Europe has been spearheading for better or for worse, given the energy crisis that they are facing now. But definitely, if you were to look at the number of EVs, so Europe is a very big market as well. The next market is actually United States. Most would have thought that the US EV market would be larger, but based on what we see from this chart, US is actually still lagging behind Europe and China in a way because they do not have as attractive incentive given to the consumers. And then at the same time, in terms of the infrastructure, it is not as established compared to in China and in Europe. Okay, so we go deeper into looking at the China EV sales. So if you were to look at the first half of this year, we mentioned that, okay, for some of the EV manufacturers like NIO, Xpeng, we saw that the deliveries actually slowed down in the second quarter of this year. But this is really compared to the very strong growth that we saw in the previous quarters. If we compare, say, the second quarter of 2022 versus the second quarter of 2021, the growth that we are seeing on a year-on-year basis is actually still very high. Effectively, between last year and this year, the total number of EVs delivered in China has still doubled. Okay, so I think while we shared that the pace of deliveries is slowing down, but if you take a step back and look at it from a year-on-year basis, the overall structural growth trend is still fairly decent, which in a way reflects the strong consumer demand. But then at the same time, because of the production constraints, they were not able to keep up, which is why you saw that the deliveries slowed down compared to the last 2 quarters. The other interesting fact would be the penetration rate of electric vehicles. Okay, so this would show you the EV sales in the blue column. But what we also show in this chart is the EV penetration rate. And what this EV penetration rate shows us is that for every vehicle that's being sold in China, what percentage of it is an electric vehicle? Okay. If we were to look, say, in 2019, 2018, the figure would be maybe below 10%. So for every 100 vehicles being sold in China, less than 10 would be an electric vehicle. But what we saw in 2022 is that the penetration rate actually increased, such that for every 100 vehicles being sold in China, close to 1/4 would be an electric vehicle. Okay, so that is actually a very high number. Just to give you some numbers for comparison purposes, maybe in Europe, it'll be in the range of 10 to 15%. In the US, it'll be below 10%. In Singapore, the latest that I checked, for the first half of this year, it will be at about 10%. So this 24% is actually a very high number. And that really reflects the tax incentives that I shared earlier, in that, yes, the average consumer in China might be thinking, being more cautious about spending because of the lockdowns, because of the economic uncertainty. But what has also happened is that if he or she is going to buy a vehicle, the likelihood that it's going to be an electric vehicle has actually increased over the course of this year. So this once again reflects the structural trend in the electric vehicle market, because that reflects the increasing adoption of the consumer towards electric vehicle. Okay, so we talked a lot about the Chinese market. The other interesting trend to take note of is that the Chinese EV makers are also expanding into the global markets. So they are not only wanting to sell in China, but they are also trying to sell the EVs in overseas markets. NIO, once again, would be one of the leaders in this. They entered Norway in 2021, and they are also expanding into other markets such as Germany, Denmark, Sweden, and the Netherlands. So that is another key trend that we'll be looking out for, to see what is the success that they have in these different markets, whether they are competitive against the global automakers in these markets. Because if they are able to make some progress in the markets that are outside of China, then that represents an even global market that they can actually be tapping. Okay, so back to this test yourself question. Which of the following have the most EV sales in 2021? A, USA, B, Europe, C, China. It was something that I spent quite a lot of time sharing earlier. So I see the responses coming in. The answer that I will be sharing later shouldn't be a surprise to most of you. Okay, so thanks so much for your participation. The answer is C, China. So just as a recap, China represents more than half of global EV sales. It is then followed by Europe, and then USA would be slightly behind because they haven't been as aggressive in terms of the incentives as well as the infrastructure build-up. Okay, so we have talked about a few positive things around the EV sector. We talked about how their production could potentially improve. We talked about how the management are confident about the margins in the second half of this year. We also shared the kind of structural growth drivers for the entire EV sector. But as with every investment, there are risks as well. So that is what I'll cover in the next section. Okay, so one of the things that investors are looking at very closely for would be raw material costs. Okay, especially in today's environment where inflation is the keyword. Whether you're looking at chicken, anything that you buy, the price is actually going up. And what is also going up would be one of the key raw material that goes into making the EV battery, which is lithium carbonate. So I've taken the chart here, which shows the price of lithium carbonate over time. What you see here is that from 2018, 2019, 2020, the price of lithium has actually been coming down. So this has actually helped to drive the adoption of electric vehicles because of the fact that as the price of lithium comes down, the price of battery also comes down. And with that, effectively, the price of the entire EV also comes down. So that's made EV more competitive in terms of the pricing rather than a conventional vehicle. But what has changed since 2021 is that we saw a very sharp spike up in the price of lithium. So this is probably like a chart that you see for a lot of different commodities, but maybe to a lesser extent, you might not have seen such a sharp increase in the price of, say, Brent crude oil or copper. But what we saw for lithium is that from below 100,000 yuan per ton, it spiked up to 500,000 yuan per ton, which is close to a 5 times increase. Came down a bit before this year, but it has actually continued to go up and stayed at about the 500,000 per ton level. So this is something that is definitely worth watching out for, because if the battery cost remains very high, it means that the EV cost would remain high as well. Or effectively what the automakers would then have to do is that they would then have to think about whether I want to price the EV at a lower price, but then I end up with a lower margin. But all of that is actually not good for the profitability of the EV makers. So we'll continue to keep a lookout to see whether the price of lithium will start coming down. But at least for now, based on the last time that we checked, which was this morning, it still remains at a very high level. Okay, the other thing to keep a lookout for would be Chinese government subsidies. Okay, so we shared earlier about how the subsidies are a very big reason for why the adoption rate in China has been very high. Part of it is driven by the very attractive incentives given to consumers to be buying an EV. From this year, we've already started to see the Chinese government cutting the subsidies by 30%. It isn't clear whether it will be cut further in 2023. So that is something that we'll continue to keep a very close lookout for. If it is going to be cut further, that could actually dampen the demand for a period of time, because the pricing wouldn't be as attractive compared to other vehicles. But for now, there hasn't been any news about whether these subsidies will be cut further, which is why this is something that we will keep a very close lookout for. Okay, so we have talked about the two key risks and what we will look out for in the EV sector. Lastly, we'll start to be looking at what are the ways that we can get exposure to the EV sector. Okay, we spoke a lot about NIO earlier, and that is because it is one of the largest listed Chinese EV manufacturers. It is widely followed by a lot of investors as well, which is why we actually spend quite a lot of time talking about this name that I believe a lot of you will be interested in. So it is a Chinese producer and it focuses on premium EVs. So the keyword here is to focus on premium, because you might be wondering, oh, how come it doesn't produce as many EVs compared to Li Auto, compared to Xpeng, compared to BYD? And the key reason is because they focus on the premium segment. So because the average selling price is higher, they do not manufacture as many EVs on a monthly basis. Where can you actually find NIO stock? The primary listing is in New York, but it also has a secondary listing in Singapore, which started in May this year. Since its listing, it has been widely followed by retail investors, and we have seen healthy trading volume in NIO after the secondary listing in Singapore. You might be thinking, oh, so what's the exciting thing about NIO? What differentiates it from other EV manufacturers? A big part of it is around the battery swapping and automotive driving technology that it has. So that actually sets it apart from the other Chinese EV manufacturers. I'll go and share a bit more about the battery swapping technology later so that you have an understanding of what this is. But to understand NIO, the technology is a very big part of it. While it is currently loss-making, the company targets to be break-even in 2025. So they have actually stated this as something that they are moving towards, because naturally, I think a lot of investors will be wondering whether they can sustain this loss-making mode for an extended period of time. We talked about the expansion of Chinese EV manufacturers to overseas markets. So likewise, NIO, they expect to launch into 25 countries and regions worldwide. Some of those that we shared earlier, such as in Norway, Germany, and that will continue to expand as they try to increase their reach beyond China. Okay, so if you were to look at some of the key models that they have, started with some of the larger vehicles like the mid to large SUVs in 2018 with the ES8 model. Then thereafter, you actually saw that they were able to launch progressive models. And I think the interesting point from this particular table is that if you look from a year-on-year basis, they have consistently been able to increase on their car sales each year. Probably very few companies can see this kind of numbers, where in 2018, it was about 11,000 vehicles being delivered. By 2019, doubled to 20K, 2020 doubled again to 44,000, and in 2021, doubled to 90,000. So I think because of this very strong growth in electric vehicle sales, that is why when we look at the valuation later, some investors are willing to peg it to a price to sales multiple. I shared a bit about the battery swapping technology earlier. So maybe I will discuss a bit more about what this actually entails, because it's not something that we have seen in Malaysia, not something that we have seen in Singapore. Effectively, what it does is that you can drive your electric vehicle into one of these battery swap stations, and they're able to replace your empty battery with a fully charged power pack within minutes. So this is all part of the convenience towards owning an electric vehicle, because one of the complaints that you've probably heard in the past is that, oh, if I bring it to the charging station in the past, I leave my vehicle there, even the fastest one to charge the battery fully, it will probably take 30 minutes in the shortest period of time. sometimes 1 hour, or I might have to leave my vehicle there overnight. But this battery swapping station actually removes the hassle, because you can just drive your vehicle into one of the stations and your battery pack can be replaced within a few minutes, just like you're pumping petrol. Okay, so we talked a bit about the valuation, but one question that you definitely have will be, how do Chinese EV stocks compare to Tesla? Because I'm sure many of us here follow Tesla very closely and will probably be more familiar with Tesla. So I use that as a reference point. If we look at the total deliveries in the first half of this year, definitely Tesla will be ahead of the 3 key EV manufacturers that we brought up for today's discussion. I know some of you are familiar with BYD, but we didn't put it in today's presentation because of the fact that it's listed in China. It might be harder to get exposure to BYD. So we are discussing mainly the likes of a NIO, Xpeng, and Li Auto. So effectively, your deliveries by Tesla far exceeds that of the 3 companies that we look at. And that has also enabled them to get more significant scale compared to the 3 EV manufacturers that we are looking at here. Okay. The next one would be the gross margin from different EV makers. Okay. We can see that in terms of the gross margin, what we have is that Tesla's gross margin is way above some of these Chinese EV manufacturers that we look at. Part of it is because of the scale that we discussed, because if you are manufacturing more vehicles, you have the economies of scale, your average production cost actually comes down, so you can potentially earn a higher gross margin. So Tesla's gross margin at about 25%, Li Auto 21%, NIO 13%, and Xpeng at about 11%. So yes, Tesla is generating a higher gross margin than most Chinese EV makers at this point in time. Okay. Next, we come to the valuation. So we saw that Tesla manufactures more EVs compared to the 3 that we are looking at here. It also has a higher gross margin compared to the 3 Chinese EVs. But then if you were to look at the valuation from a price to sale perspective, because some of these EV manufacturers are not profitable, so most investors might prefer to look at them from a price to sales perspective. Tesla at 14 times price to sales, NIO 5 times, Li Auto also close to 5 times, Xpeng a bit cheaper at 3 times. So investors are already reflecting the higher production volume, the better brand name, the better profitability of Tesla in the valuation as well. So everything has a price. The key question is, what price are we willing to pay for each of these different features that are important to us as investors? Okay, so if you don't want to spend looking at individual stocks, ETF is also a good way to have a diversified exposure towards this theme of Chinese electric vehicles, because then you don't need to decide, which company has an upcoming new launch, who has a better gross margin, who has the factory in Shanghai that is going to be impacted by the COVID lockdown, because ETF offers you the diversified exposure towards the entire industry. So what we have here is a Nikko AM Straits Trading MSCI China EVFM ETF, a very long ETF name. But what EVFM actually stands for would be electric vehicle and future mobility. So what this does is that it is a SGX listed ETF that offer investors access to Chinese companies. But as the name suggested, it is not just electric vehicles. The future mobility also refers to energy storage technology, autonomous vehicles, shared mobility, and new transportation method. So all ETF will be tracking an underlying index, and what this ETF actually tracks is the MSCI China All Shares IMI Future Mobility Top 50 Index. If you are thinking about the top holdings of this ETF, it'd be a lot of the names that we discussed, like NIO, Xpeng. But if you are thinking about having exposure into BYD and it might be difficult to get direct exposure to BYD, then the ETF might be one of the ways that you can get exposure to BYD as well. So to maybe share a bit more about this future mobility, since not everyone might be familiar with it, apart from the EV manufacturers, it would also have exposure to hardware and components. So the battery improvements that is helping to extend the driving range and making EVs as a more attractive choice for consumers. Because it goes into autonomous driving, so the software around autonomous driving will be part of the stocks that will be owned by this ETF as well. And last but not least, for EVs to actually take off, infrastructure is a very important component. So the companies that help to develop the charging network would be actually stocks that this ETF would own as well. Okay, so I've come to the end of the presentation. I know there are a lot of questions that have already come in. If you are looking for additional resources, feel free to visit our website. Or if you have other questions, feel free to ask on our Telegram chat. Okay, so with that, I will start the Q&A session because I see that a lot of you are already very eager with your questions. Okay, let me just spend some time to look through the questions.
Hi, Gerald. I'll take it over here. Just a moment. Let me share my screen first.
Okay.
Okay, now once again, thank you, Gerald, for the insightful session. And to all our viewers, thank you for tuning in to this session as we will start our Q&A session very soon. Now, if you have any questions during the meantime, you can still type up inside the chat box and our team will compile them to send it to our speaker later on. Now, if you want to know more about trading in Singapore, you can scan the QR code right here on the screen to visit the link for more information. Okay, you can also join the SGX Invest Telegram channel to get the latest market insights inside the Singapore market. Once again, the QR code is right here on the screen. A quick reminder is that if you want to open a trading account with the M Equities LH team, you can do so by scanning the QR code or type 3 in the chat box, and our support team will contact you shortly to guide you the steps afterwards. And what's more is that those who sign up today will also get an extra 500 MP points when your trading account is opened successfully. We're also running a cashback campaign where you can get 100 ringgit cashback when you perform 3 buy transactions inside the Singapore stock market in your new account with the M Equities LH team. So if you're interested, once again, you can scan the QR code right here on the screen or find our team member. Okay, for current MQ Trader members, remember to screenshot this webinar and upload inside the quiz email to claim your 300 MQ points as your check-in rewards for today. Now, if you haven't registered for this webinar, do register now by scanning the QR code on the screen so that you can get our post-webinar updates. We'll also be giving out mysterious gift towards the end that is worth up to 249 ringgit right after the Q&A session, so do stay tuned for it. Okay, so right now we'll start with our Q&A session. So the first question is from Zach. With most EV makers like NIO and Tesla have not been profitable, shouldn't we wait till they show sustainable profit in the long run before investing into the sector?
Okay, so very good question, because it shows that as investor, we are not just investing blindly, but we think about the profitability of the company, the long-term fundamentals, which is always a very good approach. So the question is whether we should wait for these companies to become profitable before investing in them. So I'm not going to give any financial advice as to whether we should be investing in these stocks or ETF now, or whether you should wait for longer to invest. But something that I will share would be, investors are generally forward-looking. So what they would typically do is think about where the industry can potentially end up 5 years later or 10 years later, because effectively the market is forward-looking. So while they may not be profitable at this point in time, the question that a lot of investors will be asking themselves is whether they will eventually be able to turn profitable. Are they on track to be doing so? And if that is the case, can I actually ascribe a certain valuation to the stock today? So one thing that will help us understand whether they are on the path to profitability would definitely be their delivery schedule, based on whether that is tracking the expected growth in the entire EV market. So using what I shared earlier as an example, if I look at the last 2 years, the number of EVs sold globally went up 3 times, from 2 million in 2019 to more than 6 million by 2021. So then what most investors would do is we'll look forward, say in 2025, 2030, what is the total number of EVs being sold at that point in time? I also showed the delivery numbers of NIO over the last few years and how that has doubled on an annual basis. So we can also use that as a reference to see, okay, if they are able to do that on an annual basis, the production actually continues to go up, whether they are able to then turn profitable at some point in time, because of the fact that your average cost of producing your electric vehicle might actually start to come down when you have larger scale, which is what we saw for Tesla as well. So going back to your question as to whether or not we wait till they show sustainable profit in the long run, I think the more important question to ask is, do we actually believe they can generate profitability in the long run? Because if they are actually on track to turning profitable, some investors might actually want to price that ahead rather than wait till they become profitable. But then on the other hand, if there's no way for them to become profitable, then that might not actually be a sector or a stock that investors might want to be investing in.
All right, let's move on to the next question. The next question is from Jin Lo at Facebook. If the traditional car maker managed to boost their EV car production, how do you think it will affect the current EV car makers like NIO?
Okay, so competition is definitely something that investors are looking out very closely for. It is not just your new EV makers coming in to take a share from your incumbents like Tesla, but then you also have the traditional automakers wanting to get a share of this pie as well, because I think the trend is becoming more and more clear that EV is what will drive growth in the automotive market over the next 5 to 10 years. So I think it goes back to why we invest in a company, because while many companies want to produce electric vehicles, the question is whether they have the competitive edge to be able to have strong production and a good gross margin on the EV production. So I think if I were to compare the pros and cons of the automotive companies, what their strength is as a traditional automotive maker is that they are stronger in terms of their financial power. They have already a very established distribution network to be able to, say, distribute the EVs that they manufacture to the end consumer. But what we see for a lot of the new EV makers like your Tesla, your NIO, your Xpeng is that they are very innovative in terms of the technology, which was why I spent some time talking about NIO's battery swapping technology, because that is not something that, say, GM would be able to replicate right away, even if they decide to enter the EV market today. So I think that is an interesting development to watch, to see whether as more of the traditional automakers come into the market, they will be able to gain more market share away from the likes of a Tesla and NIO. But each of them actually have their relative strength and weaknesses. So we will see how they are able to utilize this to be able to gain from this growing EV demand.
Okay, thank you for the insightful answer. Now let's go on for the third question. It's from Billy. Question is, with supply chain constraint and raw material price rising, should we wait till all these issues resolve before investing in the EV sector?
Okay, so good question, and it shows that you have actually been listening to what I shared earlier in terms of some of the challenges faced by the EV sector. So definitely we are saying supply chain constraints, the raw material price is still very high at this point in time. I guess not again sharing when is a good time to invest in the EV sector. One question that I would be asking is, number one, whether this is something that has already been priced in, because the first chart that I showed is actually the share prices of NIO, Xpeng coming down this year. So in terms of the supply chain constraint, the rising material price, those are something that investors might already have priced into the share price of the EV makers. Of course, if the raw material price were to go up higher, that might be a negative surprise. If the supply chain constraints start to come back again because of potential lockdowns in China, that would represent a negative surprise as well. So what we are looking out here for is what is the incremental development, whether the supply chain constraints will start to ease or it will worsen, whether the raw material price will rise or it will start to come down. At least on the supply chain constraint side, what we have seen over the last few weeks is that there are some signs of easing. That doesn't mean to say that it won't worsen again thereafter, but at least based on a few signals that we have monitored, it seems to be becoming better in the last few weeks, and that is reflected across many different companies as well. In terms of the raw material prices, something that we continue to monitor, while a lot of other commodity prices like oil have started to come down, lithium is one of the few commodities that has still been stubbornly high because of the supply constraints. So that is why we shared that as one of the key risks towards the EV sector at this point in time.
All right, so now let's move on to the last question of this evening. It's from Ziheng. How do we classify the EV sector when we do our evaluations? Do we view it as a tech company or an automotive company?
Okay, so if I were to try to classify, I think it goes back to some of the key charts that we shared earlier. If you were to look at the kind of growth for the EV makers, it would probably resemble more like a tech company rather than a traditional automotive company. Because for your automotive companies, some of the names you might be familiar with, you don't see an ability to double the production and revenue on a year-on-year basis consecutively for so many different years. I think very few industries are actually able to do that, which is why you see all this excitement about the electric vehicle industry. If I'm looking at a more conventional industry like your traditional automakers, if they are able to grow at a low single digit on an annual basis in line with the global GDP growth, that is already a very decent number. But what we saw for the EV sector is that the growth is actually exponential. So I think that is why most investors would tend to see them more as tech companies. It is a double-edged sword. So number one, you get higher valuation because investors look at them from a price to sales perspective. But at the same time, like what we saw this year, as interest rates start to go up, the share prices of some of these high growth stocks would also come down as well. So yes, you get higher valuation, but it is also more interest rate sensitive as a result. So I hope that answers your question in that they are probably seen by investors more like tech stocks than traditional automotive stocks.
All right, thank you, Gerald, for the informative sharings. And I believe our viewers have learned a lot about Chinese EV sectors from you. And that concludes our Q&A session. So, okay, for those who are interested in opening a trading account with an equities RH team and or want to participate in our 100 ringgit cashback campaign, remember to send your contact details to our team member via the QR code on the screen or type 3 in the chat box. Remember, you can still register for the webinar if you want to get our post-webinar updates. All you have to do is scan the QR code right here on the screen. Now, after the webinar ends, remember to do the post-webinar quiz and upload a screenshot into the quiz email to claim your check-in rewards. Also, just a quick sharing is that we MQ are having another live stream session on next Wednesday, and it's about how to choose the right stocks by analyzing the fundamentals. It will be conducted in Chinese, and if you're interested, do stay tuned to our Facebook or Instagram for more details. And now we'll be starting our mysterious gift session. Remember that you can win gifts worth up to 249 ringgit. And here are the rules. There will be questions and answer options shown on the screen. And for each question, we will choose the first two to answer on on Zoom. And the first one to answer on Facebook will be the winner. There will be a total of 3 questions. And if you have won it before, we'll pass the next chance to the next person so everyone gets a fair chance. And for winners, remember to send us your contact details like your name, mobile number, and email address via the private chat function on Zoom or Facebook, so that if you won our prize, we can arrange them to send to you. Now, if you guys are ready, we'll now start our mysterious gift session. And for the first question, how much cashback can you win when you open a trading account with M Equities LYH team and invest in the Singapore market? Okay. I see there are a lot of answers. Any more answers? All right. The correct answer for the first one is A, 100 ringgit. So let me check the first 2 persons that got it correct. Just a moment. Okay, on Zoom, the first 2 winners are Peck and Tay89888. So remember, if you win, do send us your name and contact number and also your email address so that afterwards we can arrange and send the gifts to you. And remember to send us your details during the Zoom session. And so we'll be moving on to our second question. Okay, our second question. Which Chinese EV maker below is listed in the Singapore market? Wow, there's a lot of answer. I'm scrolling up to check the first one. Okay, just a moment, let our team compile the name first. And so for the first question, whoever that won the prize, remember to send us your details. Okay, the answer for the second question is C, Neo. And the winners on Zoom are Edward and also Fabian Loy. Please send us your name and contact number and email address. I'll pause here for the winners to submit their details to us. Okay. Now let's move on to our last question for this evening. The last question will be, other than new shares, what other instruments can we invest in Chinese EV sectors via the Singapore market? Now remember, for the winner of second question, to send us your details. And so we'll review the last answer for this mysterious gift session. And the answer is B. For winners who have not yet sent us the contact details, remember to do so now, as you just need to send us your name, mobile number, and email address. And for the last two winners of tonight is Shin Teo and W Kai. Now, while waiting for them to send their details, you are more than welcome to send us your inquiries regarding MQ Trader or about Singapore stock market inside the chat box, and I'm more than happy to help you. Now, just a gentle reminder, the winners who have not yet sent us their details, please send us, as we are still pending for your contact details and much. And once again, I would like to thank Mr. Gerald for your insightful sharing session tonight.
Thanks, Robin, and thanks everyone for participating.
Yes, once again, a very big thank you to all of you who have participated in our webinar today and made it to a successful one. And MQ Trader will be organizing webinars at least once every month. So remember to like and follow us on our Facebook and Instagram so that you won't miss any of our updates. You can also follow our i3 Investor page to get our latest updates or download MQ Chat to get all the features of i3 Investor. And remember, we are having a 100 ringgit cashback campaign. So if you are interested in investing in Singapore or just want to have a free stock trading account that are able to invest in Singapore stock market, remember you can scan the QR code on the screen. And after you've done 3 buy transactions on any stocks, any Singapore stocks, you'll be able to get your 100 ringgit cashback. Now, the campaign will end on 31st December, so limited redemptions only, so better be quick. Once again, you can also follow our Facebook and Instagram for any financial market updates like we have IPO or even daily MQ market updates. Now, if there are no further inquiries, we'll end the webinar today. Right now, I'll turn off the camera. But the webinar will still be live for another few more minutes so that you can refer to the links inside the chat box before it's gone. Once again, thanks for joining our webinar and have a great evening.
Thanks for watching.